Let's dive in into the today's first topic, which is accounts payable. So accounts payable, as you would know, is very simple process basically where you are paying the invoices related with the hotel to the supplier. So there is not much of things to do. The basic important process is the what is the basic process is that one usually the PR is requested by the concerned department. So in a hotel, maybe they are using a manual purchasing system, or they may be using a system, automatic system, which is, for example, like check EAM. If you may be using it, or you may be using IDS if you are using that one, or there are multiple other material management softwares which includes the purchasing process. So it's a very integrated process of purchasing and cost control, receiving department. So the output of all these processes is the invoice once you get the goods from the supplier. So the process runs like this. Once usually you have a purchase request which is requested by the concerned department, and then it goes to their particular department head for approval. So usually you may have one quotation, you may have two quotation, or you may have some kind of specification to be sent over to the purchasing department. But before purchasing department, usually a department head is going to approve that purchase request. Say, okay, this is what I want to buy. So usually in the hotels, you may have a daily market list, right? Which is created by the kitchen staff, and also you have daily requests for by the other departments. But usually the hotel is keeping in stock a lot of items which is required on a day-to-day basis. So it's not like a hotel is running after into the market to buy toothpaste or toothbrush for the guests to use. They are typically keep in the store, so you buy them only once in a month, or once in a 2 months, or once in a quarter, depending on where you are buying from. If you're buying from the local market, you can buy for a week and then use it, keep in the store, and then give it out to the guest whenever they want to use it. If the items are coming from another city, you may buy for a month stock or 2 month stock. If the items are coming from overseas, you may want to buy a 6 month stock or 3 month stock, so that the shipment is coming regularly and you have enough stock while you are keeping the things in the store. So for that, we discussed the something called par levels when we were discussing our cost control function. So usually the department is going to raise a request. So they will uh, raise a request, then it will go to, after it is approved, it's go to the purchasing. So purchasing again, in the purchasing process, they will take the three quotation that we also discussed in the cost control controls, that the purchasing department will compare the specifications. They will take three quotations or two quotations or whatever number of quotations that company is has a policy, and then they will issue the purchase order to the supplier. Right, once the supplier is getting a purchase order, they will come and deliver the items to the hotel, and the receiving department will check these goods and against the purchase order issued by the purchasing department. So they will check the invoice, whether it's matching with the purchase order or not, and whether it's matching with the physical delivery or not. Right, so on a daily basis, you have food and beverage items, which is most frequently received, and then you may have once in a week some cleaning items. In a month, you may have some imported items, store items. So you always have something to receive in the hotel. So the primary defense of the whether we are paying the right bill is the receiving department, right? So receiving department is going to make sure that all the invoices are received by them if they are for goods. Now, for services, invoices will go to the relevant department head, say that, okay, this is the service that I have received. And then they will approve that service, and then accounts payable will say, okay, now I can pay the invoice because I'm sure that the department has checked and the services are received by the department. So that is the general process until the invoices are coming up to the finance. So once they come to the finance, usually accounts payable department will batch them for due dates. Now, what is the why they have to batch it? Because every invoice may not have the same date. There are some suppliers who may be giving you a daily credit. There are some suppliers who give you 1 week credit. There are suppliers who will give you 1 month credit. There are suppliers who may give you even 2 months, no, 2 months credit. So what the purchasing department, what the accounts payable department will usually do is when the invoice comes to them, they will check again, check with the purchase orders. Then they will check again. They will see what is the due date in that function. If the due date is in agreement with the supplier terms that we have negotiated with them, and then they will key into the system. So they will also check whether the amount has been whether this invoice has been received by the receiving function. They will look at the stamps, and then they will also look at the department has approved or not. Then they will put them into the batch. So okay, this next week, how many invoices do I need to pay based on the due dates mentioned in the invoices? So if the due date is mentioning in the invoice for next week Friday, and you have a payment schedule on Thursday. So it depends on the hotel policy. And we used to follow that if my payment date is on Thursday, any invoice which is getting due before Wednesday, we will process in in this payment process. Otherwise, if something is falling due on coming today or next day, then they will go into the next payment schedule. So usually you have like a weekly payment cycle uh, to cover up the payments. So if you have a supplier who is giving only 3 days notice, 3 days credit, then you need to shorten your payment cycle to 3 days. So it depends on what is the payment cycle of the supplier. Majority of suppliers, the hotel will define their payment cycle into according to that credit facility. Usually it's 7 days for daily things like daily fruits and vegetables. Suppliers normally don't want to wait for more than a week. So the once in a week the payment process is run, and then all the invoices falling in that week for the payment are processed in that week, and then usually you will arrange the payment depending also again on the cash flow. So in the current situation, the cash flows are tight, so you may want to hold some invoices. You always are negotiating with the supplier. Do if I can pay in the next week or next to next week or next month. So you will be adjusting your batch and adjusting your payment process according to your cash flow. For that, usually the financial controller or assistant financial controller who is managing the cash flow would be making decision. Okay, how many invoices do I need to pay in this week? So that's the normal process of the accounts payable function. And then they will prepare the checks. Then it will be sent to the FC and GM, and then finally the payments will be released. So if the payments are going to be released in, let's say, cash, uh, then normally the payment the summary will be given to the general cashier, because accounts payable themselves, they are not allowed to keep any cash, because they are the responsible for making the payments. To segregate the function of holding the payments and processing the payments and recording the payments and actually paying the money is has to be different from the inherent internal control perspective. So usually they are accounts payable department is responsible only to prepare the documents. They are not authorized to maintain the bank account or to maintain the cash. They can prepare the checks. Once it's signed, usually it will be kept with the chief accountant, not by the accounts payable themselves. So they are not going to be responsible to come and pay solely by themselves. So usually when we have a business cycle, right, we involve the other than the accounts payable department to be witness and say, okay, this is the supplier. We check the supplier name, the document. They are if some countries have uh, a process like if you are paying the cash, then you will be entitled to collect the VAT invoices, right? Some countries they don't require the VAT invoices to be separate from a general invoice. So there are two separate invoices. One is the normal invoice. One is the collection receipt of the VAT. So unless and until you get that receipt, you will not be entitled for input VAT. So you have to collect that. So normally the accounts payable department is going to collect that document before they release the payment, because after you release the payment, you cannot ask a supplier to release any kind of documents to you. They normally don't do that. Um, so once the and if the cash, then you just have to pass on the summary to general cashier and assign the date to supplier when they can come and collect the payment. Usually they will come to the general cashier and then they collect the cash payments. That's how the normal payments are done. Nowadays, in many countries, there are cash management services when the hotel doesn't have to make any kind of payment, right? So what they will do is they will give the bank, this is the supplier, these are the documents that these are the bills that I'm paying, this is the money I need to pay, and then they will tell the suppliers, okay, your payment is ready, you can come and collect in this particular branch on this particular day, and you will be able to get your check and bring all your documents, identification documents, or the original invoices together with you, and you can collect the payment. So hotel has no responsibility to pay the actual function, actual checks. So you just they just have to process the list of suppliers and pass on to the bank. Bank will do the payment, and they will charge some small fee. So that is something which at the moment you are doing when you are trying to reduce your manpower, right? Otherwise, you have to maintain a high manpower to one person to pay one person to pay the check and then another person to prepare it. By this way, by paying a small amount to the bank, you can reduce your responsibility of or you can reduce your headcount by by just having a person who can prepare the invoices for payment. The other person who need to pay is not required anymore if you are taking the cash management services from that particular bank. So the key issues in this not very simple process are usually that sometimes you don't recognize the correct expenses, right? So when the accounts payable department is recording the invoices, they have to put the chart of accounts where they are going to charge that expense. For majority, like 90% of the invoices are going into the same account, either going to food or going to beverage or going to inventory, right? But there are certain invoices which are like imported payments, suppliers for special services, maintenance contracts, which are not a usual process. Then the correct accounting treatment has to be done, because the as you have seen in usually there are so many account codes, right? There are so many lines on the P&L, and many of them are very similar to each other. So there's a very fine line difference between the two different account codes, which is very difficult, especially in maintenance and sales and marketing, which are very similar to each other. So usually the accounts department, accounts payable function, they are not really very skilled in usually, and they are not very skilled in accounting process. They are more on checking the invoices, making the process, not really the accountant. So that's usually a problem when you are checking the GL. So the chief accountant who is responsible to process the payment ultimately has to check that the correct account code is used for recognizing the expenses. So that's the very important aspect of the accounts payable function, that all the payments, direct payments which are being made, you learn the accrual process. So where let's say you have accrued the electricity invoice for the month of August. Now we are in August, right? And you have made the provision, or let's say in July, you made an accrual of July payment, right? July electricity expenses, because you did not receive the invoices. Now, when the accounts payable is getting the electricity invoice and they are making the payment, which account they should charge? They should charge directly to the electricity expenses, because they know that at the end of the month you will auto reverse the previous accrual and charge and the actual expense need to be posted in that particular account, or they should debit to the accrual account, means the liability account, because the expense has already been booked, so they cannot post directly to expenses. And what if there is a difference between your provision and the actual payment, what they should be doing? So these are very practical problems that accounts payable usually face. So in generally we what we to make it easier, what we say, we charge everything to the expenses, and all the accruals, all the other things are handled by the chief accountant. So they are the one who will gonna check the GL, and usually accruals are auto reversal. So if once in this month you make the accrual, the next month it's automatically reversed, so that when accounts payable is posting these expenses to the expense accounts, then and when you are going to review the GL in the next month for making a new accrual, you know that this month is already paid, so I don't need to make a double expense of this particular line item. When I review the GL, most of the time this is where these are very particular mistakes that I find between the accounts payable function and general ledger, that there are invoices, there are accruals which are done by the chief accountant, and the expenses are also posted by the accounts payable function. And if chief accountant is not smart enough or is not checking the GL, the both the expenses are going into the expense. So means you are recording extra expenses, and sometimes they post into the live, and sometimes the reverse happen, no expense is post and all the payments are posted into the accrual account, so accrual accounts become debit. So that's a usual process. And other issues they find is the wrong account codes. So one month the repair maintenance these building repairs is posted into building repairs expense, another month is posted into the plumbing, another month it's posted into the another account. So usually, these are the challenges when you are reviewing the accounts payable job. So they make a lot of mistakes in that. And the other issue is sometimes there are chances, even though the invoice, as we know in the normal process, has to be processed through the receiving department, to the security department, to the division head, but still invoice has to be checked again, PR, PO. Why? Because there are slippages, right? There are usually slippages, or there can be teaming and leading that okay, the receiving department and the supplier is matched. Now if the invoice is coming, and receiving department will say okay, I will put the stamp, and then it passed to the purchasing department, it is passed to the accounts payable department will see okay, there is a legitimate invoice coming from a legitimate supplier, there is a receiving stamp, it means the goods has been received. What sometimes it may not be the actual case. So that's why the accounts payable again has to check again with the PRPO, because PRPO is not issued by the receiving department. This is issued by the purchasing department. So to make a fraud, the supplier has to team up with the receiving department and also with the purchasing department. Even in that case, if let's say they match up together, because sometimes they are working together, they can be friends, but in that case again there is a last check, is the approval by the department head. If department head is also and so the accounts payable department has to make sure that department head has actually approved the invoices, each and every invoices, not just only the summary, right? Each and every invoice has to be approved by them. So that's why there is usually a lot of bundles of invoices which are sent to the chef office, which are sent to the department heads to sign. And the purpose is not to get a paperwork, the purpose is basically to follow a internal control mechanism to avoid these kind of teaming and leading processes. So this has there, because it's a cash payment function, there are very high chances of making extra payments, overpayments, and also payments without any checking. Means the goods may not have received at all. There may have been no PO at all, but you are still paying the invoice. If the internal controls are not followed properly, and that's the usually a problem with the buyers. So another issue that we normally face in accounts payable department is that sometimes the amounts are ready. So accounts payable had made the process already. They have already prepared everything. The payments are ready. The checks are ready or cash is ready. but the amount is not collected by suppliers. So what do you do then? Uh, do you have to keep on waiting, or you have to call the supplier, or what do you do? So usually the best practice is that you wait for a month, but the amount, the cash or the check, which is generally the equivalent to a cash, has to be kept by the chief accountant separately from the accounts payable function. And if in like a 1 month or 2 month the supplier is not coming, normally we cancel the payment in the system and also return the money to the hotel, because one is, it's a risk if you keep the cash in the hotel, if the keep the cash in the hotel in the name of suppliers, which is not really the required, which is not really going to be collected. And another thing is there is a cash bind up, right? The hotel could have used that particular cash to in their operation. So you don't want to keep unnecessary working capital tied up to this things in the supplier. And the check is that you normally you ask the supplier, okay, confirm. Can you confirm to me what is your outstanding on a monthly basis or on a quarterly basis, so that you can reconcile whether we really had to pay this invoice or not. If the amount is not collected like in 3 months, 6 months, and there are cases happening in like this, we assume that the supplier does not owe us anything. Then we normally go back and see why this invoice was processed. Is it the supplier has forgot, or we have done any invoice which is not supposed to be processed and it has slipped in our internal control mechanism? So that's the eye for details. Normally, the curiosity of the chief accountant can unearth any kind of fraud that may be happening in the hotel. But they have to keep a very close eye on what is happening really, why supplier is not collecting the payment, why it's taking time. These are the indications of something going wrong in the process. Okay, and the last thing is again the cash payment process is very risky. So usually, preference is that accounts are, I mean, the suppliers are not paid in cash. That's the preference. But sometimes the suppliers may be very small. They may not have the accounts open for them. So usually, we try and open accounts for them, and we deposit the money into their account and give them the debit card. They go and withdraw the money by themselves instead of paying the cash. The reason is at least there is a trail of documents which is happening. Cash trail is stopped at once you pay the cash. You don't know who is collecting, um, and whether the cash is reaching the actual supplier or not, right? So that's why the one is the segregation of duties. The person who is processing the payments, making the payments, is different from the supplier, the person who is going to make the cash payments. And you have to have a lot of other measures for making the cash payment. The identity of the person who is collecting, the authority of the person who is collecting, whether he's the actual supplier or he's his staff. Then you need to maybe ask the supplier to validate that the person who is going to come and collect the money is the right person we need to pay. So there are a lot of other things that happen for making the cash payment. So that's why the hotels generally prefer to pay by bank transfer or by the check, so that so that there is a trace that the supplier will be going to the bank to collect that amount, right? So at least the risk is reduced from the hotel side. So that's the general process of accounts payable function. Now, if you have any questions, now you can ask.